Hey guys, Andrew Henderson from Nomad Capitalist in Perpetual, Montenegro, and I wanted to talk about a common issue that people who have businesses, primarily e-commerce businesses, Amazon FBA businesses, people who are doing business where they have a lot of transactions, are worried about. And this could apply to anyone, whether you have lots of transactions or not, but it's especially applicable to people who need a really good bank. And the question is, when I go overseas, when I go where I'm treated best, and I slash my tax bill legally to zero, or I cut it in a big way, what happens to my banking? And the answer is, if you want the biggest possible tax savings, then you're going to have to make some changes in your business, and that will include banking overseas. And so if you're not particularly unhappy with your current banks, that may mean a settling in period where you want to find a bank that you like just as much as your current one. And this is a common issue that I hear from people who moved their business overseas to save tax, and then they say, oh, but my bank is so horrible. The good news is it doesn't have to be that way, but there are decisions that you have to make. If you're staying in the US, Australia, Canada, the UK, any Western country, you're effectively making a decision that you like paying higher taxes, or you accept it, right? You're happy to pay the 30, 40, 50, 60% that these countries charge. And in exchange, you get access to their banks. Now, we've talked before, this will be for another video, but we've talked about how banks in the United States or Canada or Australia aren't exactly that liquid. They're not that great. And in fact, I've had a lot of problems with US banks, particularly when I travel, where I've been locked out of different bank accounts because they got freaked out that I was in Romania, for example. So the US and those banks, they're not what they're cracked up to be. And when you start traveling, you'll realize they're not as great. But if you're banking in a high-tax country right now, because that's where your business is, and you want to move the business overseas, there are a few things you need to keep in mind. One of those things is you can't have it all. Where you're at in the high-tax world, the trade-off is you're paying high taxes. You've got banks that maybe have better online banking infrastructure or other things that you like. When you go overseas, you need to be prepared to give up some things. One of the things that Amazon sellers and e-commerce sellers in particular tell me when I'm helping them out is, I don't have much money to put in the bank. And so when you don't have much money to put in the bank, that it limits your bank choices. For example, my favorite bank in Singapore, both personally and corporate, they have a 50,000 US dollar minimum deposit and minimum balance for corporate accounts. You can have a company, even in the BVI, which is hard to get an account for a BVI company these days. You can have an account in a lot of different low tax or no tax places, and they'll take you. But you got to have some money. You can't put $500 in and say I'm done. If you only have $5,000 or $10,000, your options are going to be limited. One of the things that I tell people is to avoid the Caribbean, avoid Seychelles, avoid places like those where it's very problematic not only to receive money, other companies don't want to send you money. Those banks are under increased scrutiny all the time. Those are the banks that I avoid. Now, there are banks in lower class jurisdictions that are stable, that are good, that I recommend. But you're not going to be in Singapore. You're not going to be in the best jurisdiction. Online banking will be there, but it might not be quite as good as you'd expect from a first-class jurisdiction like Singapore. So the issue is, when you're an Amazon seller, or when you're e-commerce, or when you're doing any kind of business overseas, what are you willing to give up? What are you willing to trade in? Because the trade-in that you get in your home country is low tax. Or high tax, rather. You're paying high tax, right? So the trade-off you get, the first thing you get when you go offshore is low tax or zero tax. And in exchange, the traditional offshore banks have just become horrible. They've become unworkable. Most of the Caribbean, sadly. Like I said, Seychelles, Mauritius, places like that. That guy's really loud. But what are you willing to give up? Probably the easiest thing that I can recommend if you want to go offshore is set some money aside and be willing to have a minimum deposit. I understand Amazon, e-commerce sellers, people who are reinvesting in their business at a fast clip, people with lots of transactions, they're always turning over cash. Setting aside $30,000 or $50,000 can be hard. But if you're saving $30,000 or $50,000 or 6 figures or 7 figures in taxes every year, take a little bit of those savings, set it aside. Just know that you won't touch it because it's getting you a better bank that will make your business easier to operate. There's always going to be a trade-off, whether it's in passports, whether it's in banking, whether it's whatever it is. And I think it's a very workable trade-off. The issue really for me is not following the general consensus. If you just go down the path of opening what everyone else does, the Seychelles bank account, you're going to be like many of the people I help who very quickly have problems with those accounts because they try to have it all. They try to have low deposit, great services, online banking, zero tax, all of that. The reality is you need to make a few concessions. It's not that difficult to do, but you need to keep that in mind when you're opening your corporate bank account.